Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo. Da-na-na-na-na-na-na-na-na-na. There's an interesting comment from Nicholas in the lounge. Probably won't. Pancakes. Pancakes for dinner? Is that what we're calling pancakes these days? Actually, today is Tuesday, isn't it? So that makes sense why you guys are talking about Pancakes, because Mr. Pancake himself is here today. Stuart, are you on the call?
I am. Hi, guys. Yep.
There he is. Hey, bud. How are you today?
I'm doing great. Thank you, guys.
Good, good. Welcome back to the Frivolity. Today is Tuesday, of course. Where are we here? It is the 10th of January, marching headlong into the new year. This is our little 30-minute summary. Started a couple minutes past the top of the hour. My apologies there. Kind of wanted to figure out what the heck's going on in the world before we talk to you guys in earnest. Actually, we're having a lot of fun in the day trader room this morning. Of course, Chris and I, Shark Toshi also helping, running our opening range trade setup trades. Had an okay day. Was actually profitable on the day, so that's okay. I'm trading the micro contracts, so my numbers are like 1/10 the size. And if anything, I like the futures trading. Micro contracts, my attitude, you want a paper trade, then you want a 1/10 account size trade. So if you want to do this with micro contracts, I think it works perfectly. And then you can graduate once you're sort of nice and comfortable and fully on speed up to the big boys, because then you got to be able to handle days like minus $300 on the big boys and not get flustered. So, I think I've told you guys recently, I'm getting kind of in the penalty box since I came back from Portugal, got to sharpen things up. I'm constantly looking for new trading plans, new setups and stuff, just trying to focus and fine tune and just keep working on being the best trader I can possibly be. So I'm here trading these micro contracts. It's interesting. We had a scratch day, a little bit of slippage, unfortunately, and commissions. Scratch days now are like down $6. But we had a pretty good, pretty good go of it in the crude oil right out of the gate. Of course, we had Chair Powell speaking shortly after the crude market opened. And then, interestingly enough, I was so wrapped up in this crude trade because I had a runner on and it eventually got stopped at scratch, the runner. That actually I kind of completely missed the opening range trade on ES, but ironically enough, I would have been stopped out on the ES. So maybe that's just fate. So there is that. And keep in mind, I've been up since about 4:30-ish roughly. Chris, actually, when he phoned me, he didn't even, I don't know whether he realized or not, but I had already been awake for a little while. But day starts pretty early for me these days. I'm forcing myself to do this because I want to get back into the sort of the swing of trading. Notice when I came back from Portugal, getting a little sloppy, and also too pretty tough market conditions. So you just gotta get focused. Gotta treat this as a profession. Anyway, so the point of the matter is that was the start of the day. And then we've been having a lot of fun in the day trader room recently, working with Andrew, who's been studying up on another gentleman's day trading setup, a gentleman by the name of John Carter. I won't go into the specifics until we get this completely ironed out and everybody's sort of nice and comfortable with it. Don't stress over it. But it was interesting. And today, interestingly enough, the data was actually saying don't trade. So it was kind of fun watching this, but I've sort of intermingled Mr. Carter's kind of take on the market using up down volume, comparing it to my volume impetus concept that I teach all of you guys. And of course, all my momentum studies. And I got to say, Willie being overbought, oversold, stupid, if you will, in this kind of market state was very, very helpful. But anyway, putting it all into context. So we've been working away on that through the morning. So actually a fairly busy morning. Also too, we've been working away on the site and the indicators and the breadth indicators, and probably talk a little bit more in detail through the market summary video. I guess, what do we call it? The aftermarket party video. We'll talk a little bit more about sort of broader market measures and stuff, and how all these various trading plans and stuff are working together. As it stands right now, I think the simple message from the dashboard is market was pointing up. Got fairly friendly econs, inflation numbers starting to come back down to earth. I think I saw the Hungarian cabbage crop futures were pointing down now. So I think the cabbage crop is in place, and harvest is on schedule. So we should all breathe a sigh of relief there. Mr. Powell was speaking today. So it was actually interesting to watch the news and the econs. In essence, we had Chair Powell speaking in Sweden today. Of course, everybody's completely obsessed with, is he going to say anything about the course of short-term interest rates? And it's typical stock market-y kind of interest. You can see we've kind of had like a flat day here in North America. And like I said, in the aftermarket show, we'll probably talk a little bit more about sort of what those internal indicators are suggesting and why thinking flat's not a bad idea. Breadth indicator still pointing up. So you can see, if anything, the bias is slightly to the upside. And I have noticed that it's, you notice like Japan was up. They say your European stocks fall. Germany was actually up just a hair. Italy was up a little bit. Spain was up a little bit. So it's kind of, I think probably sort of unchanged is probably a better description for today. Market was looking for some more sort of fodder, but that's a pretty darn big move. And if anything, one thing you should definitely sort of glean from this indicator is when the fast moving average is 1,000,000 miles away from the slow moving average, it's probably a sign that we need some sort of check. And you can see these things, they like to come back, and the fast does like to oscillate around the slow. And when we start getting pretty far away, especially like down here, you should at the very least expect some sort of check. And in this particular case, this check in the short term would be there's going to be a little bit of a market rally here to sort of bring the moving average, the fast moving average, back closer to the slow. So same sort of thing. Could we see a bit of a pullback here in the breadth indicators in the broader stock market? Maybe you can kind of also see, we like, with the histogram, you notice that the country funds are actually short-term overbought. If anything, what's a little scary here is crypto's getting awfully nosebleedy, and it's actually, both medium and short-term uppy. The good part about the country funds is you can see on a medium-term basis, and also with the stock market, the S&P 500, you could probably see them bring this thing back a bit, but I'm a little worried about crypto. And interesting enough, when you go and look at the actual breadth of crypto, yes, I am long. And one of the trading plans that I'm running right now is just simply taking these crypto breadth signals. But you can see, and if anything, the entire crypto universe is actually flashing you better be careful signal. So I do find that a bit interesting. And, the crypto top 30, we are technically overbought. Both the short and the medium term are above 80. And you can see how close this is. All it's going to take is somebody to sneeze and this thing cross back bearish, and I got to hop out of that BTC long trade. And that's fine. That's exactly the purpose of this. And you never know, you might get a situation like this where we just face rip down through the remainder of January, sort of showing that January barometer. Speaking of which, we probably, hopefully we talk that bread signaling system there into the ground there a bit. You can see, if anything, it's a really simple image, but nonetheless, here are those trades off of the algo signal. So I hop back in on the long side on this dotted line. I don't know whether you can see that or not. Let's make it nice and big for you. That's what she said, all that. All right, so there is where we got back in. So, if we do have a rolling over of the breadth indicator, at least we'll show a nice little profit on that trade. So that's not bad. Now, what I wanted to mention here, since we're in this 30-minute summary, is where do I have it? I think, well, we'll come back to that in a second. But here, January barometer, how is it developing? Here we are, the 10th of January. So we're still thinking first 2 weeks of the quarter. We had a very interesting, in the after show video yesterday, we took a brief view at the first week's data, but Monday was a holiday. So it's kind of short data window, a very splotchy report. So if anything, I'm kind of waiting for this first 2 weeks to finish out so we can get a real good look at that study. And then, of course, as I had pointed out yesterday, we still got another 2-3 weeks and, of this January barometer report. And, keep in mind, we've got 2 proxies in the books now. So we had the first day, and right out of the gate, you can see they were not happy at all in the stock market. I think you can make the argument after that full first week, and we got some relatively market-friendly data coming out of the government data there on Friday, that employment report. Now, keep in mind, employment reports are notoriously inaccurate, and they often are subject to revision. So don't be surprised if you find out, they actually didn't make as many jobs as they said they did. It's, how do you tell when a politician's lying to you? You all know how to finish that statement. So anyway, point of the matter here is down for a good portion of the week, and then we had a big snapback rally into the end of the year. And so that's the first week. Let's see how this month progresses. Maybe this is the down, and in that first week there's a big down, then an up, then a down, right back down to the bottom, and then a rally. So could we maybe this was that peak and we work our way back down against these lows, then swim around these lows for a week or so, and then have some sort of white knight rally into the end of the month? It seems completely logical. I don't know, something like that. So, if anything, what was interesting was, of course, Mr. Powell was speaking there in Sweden, if I'm not mistaken. Was that correct, Chris? Did we get Sweden right? I think that was where it was. I don't know whether Chris is here. Hey, there he is. Yeah, and of course, all those that are fans of the 1980s Muppets, as soon as somebody says Swedish, we think of Cooks and Beaker. Oh, no, Beaker's a different character. Anyway, point was, had a bunch of, and especially the Europeans, no offense to our European audience, but wow, they just seem to absolutely love this environmentalism stuff. It's just incredible. So they were trying to corner Powell into getting him to comment on environmental conditions and lending. And of course, American left-wing politicians tried, through that last U.S. Congress. I don't think they'll be doing it this Congress, that's for sure. But through last Congress, trying to corner Powell. So, punish the oil companies, charge them a higher interest rate than others. And Powell's like, look, it's not our role to dictate environmental policy. We'll leave that up to the politicians. And frankly speaking, that makes perfect sense from a market perspective. I don't know. I get the impression that maybe they didn't like that. Also, too, what he said, though, and I think this makes perfect sense, is, and I was reading on the site in our news category, a couple references to it, so you can't even see this yourself. But he made a couple references that, number one, like we said, Feds, they shouldn't get involved in the environment. That's not really their role. But I thought there was another reference that to him where he basically said that you are probably going to find that the Fed theoretically, this is always up for debate, is supposed to be anti-inflationary and trying to sort of keep the financial wheels on the bus. So they might be at odds with the politicians, and especially the guy who's running the show down there in the States right now. He is more leftist leaning. And he said that, and shouldn't surprise us coming from Fox. They are more right leaning. But Mr. Powell even said that, the fight on inflation, it could create a politically uncomfortable environment, as he cannot remember. He said he wants us all in the public to feel some pain. And so as a result, that in itself could be one of the main reasons why you actually see the market come back down. He would rather things not be so euphoric. So did hear a bit of rhetoric? Hey, it's moon time. We're going straight up from here. And I don't think that that's a good idea at all. If anything, I do like the idea that we are going to be very much range bound. And if anything, kind of like what I was showing you there a moment ago, I love the idea that crypto is a leading indicator. And no offense, everybody, it's interesting how far back the stock market is, but I could very easily see crypto here. If somebody sneezes or says the wrong thing, we could have crypto come off here a bit. So just be forewarned, everyone. All right, let's see. What else am I supposed to review? We talked a little bit of day trading. We talked a little bit of January barometer, and I think to a certain degree that speaks to what we really should be thinking, sort of market direction here over the month of January. We talked breadth, and we talked breadth signals. Talked a little bit of news. As I said, the news du jour I've found was really more about the fact that Powell was speaking. And I think a lot of people wanted him to say something about, well, I think interest rates should go higher, or I think interest rates should go lower. And I think the hint out of what we heard today was the polite way to say that I'm going to keep raising interest rates is we might find that short-term interest rate policy comes into conflict with politics. I could very easily see that. So there's your backdrop. Chris, was there anything else I'm supposed to mention here in the summary?
This is one of those rare occasions where I don't have anything else because you went through all the topics and then summarized it. So that was
damn, hitting on all cylinders. All
yeah.
right. Well, if anything, probably a good illustration of a professional trader's life. We could probably just walk you through this opening range trade that we had this morning on what was it? I think it was crude oil. So it's kind of a cool trade. And then if you want to hear more about our day trading adventures and tracking the ES and these models, maybe pop on over and check out the after party show. So good illustration of what we do. Chris and I are up for the opening range trade, and I used to trade through on a prop firm, and we used to actually watch. This is this bar right here is the pit session open in North America. And this is a very, very low time frame chart. You could almost call this a tick chart for lack of a better term. But I used to, when I was at the prop firm, we used to chart sort of and follow and actually it used to be in my old trading plan 3 minutes before the opening bell. I think 5 minutes, and really the bottom line here is this low right here, which I guess is about 7 minutes before the low. That's probably your key low there. So prior to the open, first 5 minutes, then the actual open, ding, 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 ding. Chris, working with Johnny Hoagland, my old boss over at Top Step, really likes that first minute trade. And I think this speaks to like Jim Dalton and opening range trades, those kind of things. Anyway, he's watching like a hawk the first minute of trade. In this particular case, it was interesting how we had conflicting signals. I think you could make the argument that the real signal coming out of all of this was this W right here. And notice that if you had bought this W right here, it basically was buying my pre-session breakout. And maybe you would have gotten sucked into that first minute setup. I don't know. That's a tough one. But, looking back in hindsight, you can see there's pretty well-defined W there. I took my first, my pre 5-minute range. If it's under 20, 25 ticks in that kind of area, I'm comfortable with taking it. If they get more than 30, 35 ticks, 40 ticks, I think, Chris, what was there was one opening range trade today. I think it was like 39 ticks or something like that.
32 ticks.
32.
Yeah.
Well, anyway, there was one of them and I was just like, whoa, that's too much risk for me. I could, even on the micro contracts, I can't justify that shit. So I like to stick within around 20, 25 ticks, something like that. And actually there was even smaller ones. I think on the gold market this morning, we had one that was really small.
My gold
This one
range was like 5 ticks.
Yeah, so here's Chris's opening range trade. So the good part about this is that 1-to-1, Chris gets to move his stop to scratch right away. So instantly, boom, boom. All right, I can get to move my stop to scratch. I'm out of trouble. So, and did you get stopped at scratch, or were you able to actually see
no
this
profit?
up here?
Yeah, I think I got stopped out with 1 tick of profit. That was about it.
All right. Well, here was my range. It was a whopping 13 ticks. So you can see market popped up through that first minute again. Interesting how that developed. And I have seen this, and I'm just monitoring the data, just seeing how it went. In this particular case, my move stop to scratch, just 1-to-1, was hit right away and got stopped out at scratch. No big deal. Next bus in 10 minutes. So 1 win, 1 loss. This was a partial win, wasn't a full win. What I like to do is if I do see 2-to-1 hit, then I like to let them have one. And it is interesting that off of this wide range and also off of this double bottom that I told you about just a moment ago, which I think really was the trade. Notice we had a couple Foggenbaum levels up here. So when the market went zipping straight up into this area, I was like, all right, let them have one. And I think on balance, this is what we're shooting for with this opening range trade. Nice and clean. Move stop to scratch on the remaining. And as you can see, I got stopped. Actually, I got stopped out over here, basically on my last contract. So it is what it is, right? There's my opening range. Took one off at a pretty nice profit. And got stopped out on the remaining one over here. And interesting to see, this is in a way, I kind of like this trading plan because sometimes you'll just get markets. And again, I'll talk about this in the after market show. The hallmark of today's market, ironically enough, this model here that we'll talk about later is a trending market model. And it's saying, don't touch it, leave it alone. It's not a trending market. And you can see, I mean, the market's basically done nothing for like the past hour or two, just gone sideways. So if anything, I kind of like this approach where what we're really trying to do is, sometimes, and, when I know I have some in the files, but I don't just have it handy. When we get into a nice, strongly trending market, the market just doesn't look back, and you close the position out on the closing bell plus like 300-400 ticks, and it's like, woo, I'm a rock star. So those are the kind of trades we're looking for the runner. The fact that this was stopped at scratch, no big deal. This first trade actually pays the bills and makes sure that you are profitable on the day. So on balance, I consider today a win day. As I had said earlier, and we'll get into this in the after show, right now, it looks to me like we got a diamond pattern forming here on the stock market right now. Stock market can't really decide which way it wants to go. And the diamond can break to the upside, it can break to the downside. I wouldn't get into the business of predicting which way this is going to go. What I would just simply say is you actually have to wait for the resolution to tell you, and then hunt setups following that. Path of least resistance, I believe, is to the upside, but we are kind of waffling. And I think I'll leave off the video with this image. So here is good old Bitcoin. As we had talked about through the weekend, there was actually a very cute little bullish bot setup that came in. And we chatted about it through the Broiler Chicken show on Sunday. And I think I told you guys, I mean, this is literally what I want to teach you all in sort of the level 1 program. How we don't really want to have an opinion. We just literally want to, just hunt setups, trade the setups, and take profits where we're supposed to. Now, sometimes these ABCDs, this is a harmonic, sometimes they call them alt ABCDs. That's what I think this one was. So A to B was a measured move. And sometimes these measured moves can go all the way up to 127.2. And I think that's exactly what this thing was. So boom, alt ABCD, perfectly fine. Conservative trader will ring the register up in this area. And interesting enough, and this is what I always ask people, who do you think came in on the buy side up here? Well, odds are it was probably the public. They always come in late. And unfortunately, they probably bought through this move up here, and they're like, all right, yeah, I'm smart. And then, oh, geez, now I'm stupid. Oh, geez, now what do I do? I'm heavily underwater. Okay, now I'm looking good. All right, this trade's going to work fine. All right, I'm okay. And the irony of it all is you can see, remember that breadth indicator image? Ironically enough, technically speaking, this is it's a funny time frame. This is my funny Tesla. It's like a 1.5 hour chart kind of thing. But you can see potential inside bar reversal. And oh, gee whiz, is it happening in an area where it would make sense for a top to come in? Yeah, I think so. Considering our conversation about January barometer and what we're expecting later on in the year, and then throw together the fact that the crypto breadth indicator, all it's going to take is somebody to sneeze here, and this thing could very easily roll over. Now, I'm long. I'll stay long until this thing does roll over. But frankly speaking, if this thing did fail up here, it wouldn't surprise me one bit. As I had sort of said, the long setup coming out of the weekend, I think played out, and anybody who took this trade, rock and roll, Merry Christmas, way to go. But coming in right now and expecting another move higher, that might be pushing it. If I was interested in hunting a new long, I'd probably have to do something like measure this move, so A to B, right? Just kind of like this, but now thinking this is the move, so there to there, and then I'll adjust all of these things appropriately. And that would mean that I want to see one low, and then if this low does hold, of course, we've gone 33, but we haven't gone more than 66. Do I get a second low? Maybe that's it. Tough to say at this point. And then where does the 25 level set up? Third low. Can I get a third low somewhere in this area? And then that maybe sets up a new long, maybe something along these lines, heading higher. But we're still a little bit early on that. And if anything, looking for resistance to come in at this area, candle body highs for trade location, alt A, B, C, D, harmonic objectives, reload short zones. Does it make sense that the market maybe stalls out here? Kind of does. And then, like I said, the final coup de grace to all this is, do we really want to come in and be aggressively hunting longs up here? I don't know. I think that's kind of asking for trouble. All right. I think we'll leave the video at that for today. That was about a half an hour. Hopefully that gives you some food for thought, something to chew on. Slow and steady wins the race. If anything, our buys from down here, we got at least some cushion. If the breadth indicator does roll over, hopefully we'll take some nice profits. If we're really lucky, we just bang along sideways, consolidate nicely, set up a new long setup, breadth indicator still pointing positive, and hey, back to the upside we go. But for the time being, I think probably the best thing to do is let's maybe just let this develop a little bit and take it from there. All right, everybody, have yourselves a fantastic rest of your day. PMA for the win. All the best, and bye for now.